We do expect positive results. We think the majority of the bank stocks we cover will exceed consensus estimates. We think you'll see improving loan growth. We think net interest margins will continue to expand, despite a flattening yield curve. We look for controlled costs, very benign asset quality, and not only active share buybacks this quarter, but an acceleration over the next 4 quarters as the bank's, recent passing of the stress test kicks in.
Jason, I mean, obviously it's been kind of the inputs for the bull case for a little while now. What do you think it's going to take for kind of investors to embrace this? Does it just have to be sustainable as far as people view it, or do buybacks have to, exceed expectations, or trading? What's going to be the swing factor?
Yeah, no, I think certainly there's a lot of focus on loan growth. And, the year got off to a sluggish start. But if you look at the Fed data, loan growth actually increased each of the last 5 weeks. You haven't seen 5 straight weekly increases in over 2 years. So we think that will be well received. And then, starting after earnings, the recent buyback approvals kick in with, a lot of these banks buying back 7, 8, 9% of their stock is coupled with, 2-3% type dividend yields is going to put in some nice support. So, I think at the moment the flattening yield curve has weighed on sentiment. We do not think that signals a recession. And if anything, as long as the Fed continues to hike, we think margins can expand. And then on top of that, there's obviously been some concern around global growth and what the new trade restrictions could imply. But we remind investors that the majority of these banks' earnings are tied to the U.S.
So, Quint, you're not as optimistic. Looks like you just sold out of JPM, which was the last of your holdings of the big banks. Why?
Well, Sarah, Jason just alluded to, we're in an environment right now where everything is positive for the banks. I mean, you have a strong economic recovery. You have short interest rates going higher. You have deregulation. You have buybacks. Everything that Jason said, I agree with. There's one problem. The stocks are not responding. And in 20 years of me doing this, when I view the stock market and sectors, I have to watch the money. And right now, look at today. Market's up 80 bips. The financials were barely green. That's telling us something. The market is a discounting mechanism. All of these things that Jason said are already priced in, and I believe the financials are giving us a warning sign that something's coming that's not being reflected in the other sectors. So we are absolutely taking heed. We sold out of our big banks for now, and we're being very cautious on the rest of the market.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.